Welcome back to Algobot, where we take apart automated trading strategies and study how they work, one line of code at a time. I'm your host here at Algobot, and today we're exploring an expert advisor for MetaTrader 5 called Trend State Forecast Pullback. This strategy is built on a forecasting method known as Holt Linear Trend, and it trades pullbacks inside an established trend. Over the next few minutes, you'll learn how the model tracks a trend, how it times its entries, and how it manages risk from start to finish. Everything here is for educational purposes only. Let's dive in. So what does Trend State Forecast Pullback actually do? At its heart sits Holt's linear trend method, also known as double exponential smoothing. Instead of a single moving average, this technique keeps two values that update on every completed bar. The first is the level, a low-lag adaptive baseline that follows price. The second is the trend, an explicitly modeled per-bar slope that measures how strongly price is drifting in one direction. Together, they let the strategy project a simple forecast forward in time. That modeled slope, rather than a rough difference between 2 points on a line, is what defines the trend for this system, and it's what sets it apart from ordinary moving average approaches. The strategy is a trend-following pullback system. It does not chase breakouts. Instead, it waits for a healthy, established trend, then looks to enter on a shallow dip back toward the model's own baseline, aiming to join the move at a more measured point. To decide when a trend is genuine, it normalizes the slope by the average true range, turning it into a dimensionless measure of drift per bar. Only when that measure clears a minimum threshold does the strategy treat the trend as meaningful. This is a fully symmetric system, meaning it treats long and short setups with mirror image logic. It's designed with liquid intraday markets in mind, such as major foreign exchange pairs or index instruments, on time frames like the 15-minute up to the 1-hour chart, though the time frame is never hard-coded and simply follows whatever the chart is set to. In terms of who might study this approach, it will appeal to traders interested in trend-following logic, adaptive baselines, and structured risk management. Remember, this is an educational breakdown of how the code behaves, not a recommendation to trade, and certainly not a promise of any particular outcome. Trading always involves risk, and losses are a normal part of the process. Let's walk through the mechanics step by step. On every newly completed bar, the strategy updates its two Holt values. The level is a blend of the current close and the previous level projected forward by the previous slope. The trend is a smoothed estimate of how much the level just changed. Two smoothing constants control this. Level alpha, defaulting to 0.25, sets how responsive the baseline is, and trend beta, defaulting to 0.10, sets how quickly the slope reacts. Next comes the first filter, the regime check. The strategy divides the trend slope by the average true range, computed over a period of 14 by default, to get a dimensionless slope. If that value is at or above the SlopeGate, defaulting to 0.08, the market is in an up regime. If it is at or below the negative of that gate, it's a down regime. Anything in between is treated as flat or choppy drift and is ignored. The second filter is the reclaim. Inside a valid up regime, the strategy waits for a genuine pullback. The prior completed bar must have closed below the level line, showing a dip against the trend. Then the current completed bar must close back above the level, and it must be a bullish candle whose close is above its open. That combination is a fresh one-bar reclaim of the baseline in the trend's direction. For shorts, everything mirrors. The third filter is the no-chase rule, and this is where the forecast is used directly. For a long, the close must still sit at or below the level plus the horizon times the trend, using a default forecast horizon of 3 bars. In plain terms, price must not have already run past where the model projects, which blocks entries on overstretched bars. When all three align, the strategy places the trade. The stop-loss sits just beyond the recent pullback extreme, with a small buffer measured in average true range units, and the setup is rejected outright if that stop would be wider than the maximum stop, 2.5 ATR by default. The take profit is a reward-to-risk multiple, defaulting to 2 to 1. Once price advances by 1 unit of risk, the stop jumps to break even and then trails by 2 ATR, working to keep drawdown contained. Here's the core of the MetaTrader 5 code as it appears in MetaEditor. At the top are the inputs. SlopeGate, defaulting to 0.08, is the minimum normalized slope for a valid regime. ATR period is 14, pullback bars is 3, and forecast horizon is 3. Max stop ATR of 2.5 caps how wide the stop may be. Reward ratio of 2 sets the target. Break-even R of 1 arms the break-even move. And trail ATR multiple of 2 governs the trailing stop. Just below, the code computes the forecast as the level plus the horizon times the trend. Then comes the long block. When the market is in an up regime, the strategy checks for conditions. Was below, meaning the previous close was under its level. Reclaimed, meaning this close is back above the level. Body, meaning the candle closed above its open. And no chase, meaning the close has not passed the forecast. When all 4 are true, it calls triangle with true, which fires a buy. The short block is the mirror image. In a down regime, it checks that the previous close was above the level, that this close is back below the level, that the candle closed below its open, and that the close is still at or above the forecast. When those line up, it calls triangle with false, which fires a sell. Inside triangle, the take profit is set as the entry price plus or minus the reward ratio times the measured risk, and the order is sent with trade.buy for longs or trade.sell for shorts, each carrying its stop and target. It's a compact, symmetric structure that keeps the entry logic and the risk in one place. Let's bring this to life on the chart. On the price candles, you can see the blue Holt level baseline weaving through the action, and in the panel below is the normalized slope, the trend divided by the average true range, with dash gates drawn at plus 0.08 and minus 0.08. We open on the left with a steady climb. The first few candles push higher, each closing above the last, and the level baseline rises smoothly beneath them. Down in the subpanel, the slope is sitting comfortably above the upper gate of plus 0.08, so the strategy recognizes this as a valid up regime. It is not looking to buy the strength directly. It is waiting patiently for a dip. That dip arrives a few candles in. Price pulls back and closes below the blue baseline, a small pause against the trend. This is exactly the counter trend close the strategy needs on the prior bar. On the very next candle, price turns and closes firmly back above the baseline, and it does so as a bullish candle, closing above its open. That is the fresh reclaim. The strategy also applies the no-chase rule, confirming price has not overshot the forecast, and with the slope still above the gate, all conditions align. You can see the buy entry marker fire right there as price reclaims the line. The stop is tucked just below the recent pullback low, a natural point of invalidation, and because that distance is inside the 2.5 ATR limit, the trade is accepted. From there, price resumes its climb. The following candles extend higher. The trailing logic arms once price has advanced by 1 unit of risk, and the move reaches the take-profit target at a reward of 2 times the initial risk. You can see the take-profit marker where that long trade closes. Now watch the character change. Price stalls near the highs, and a lower candle appears. Over the next few bars, the market rolls over and begins stepping down. In the subpanel, the slope falls through 0 and drops below the lower gate of minus 0.08. So the strategy now recognizes a valid down regime and starts looking for a mirror image setup. The setup forms cleanly. One candle bounces upward and closes above the blue baseline, a counter-trend pop against the new downtrend. That is the prior bar condition for a short. On the next candle, price rejects and closes back below the baseline as a bearish candle, closing under its open. The no-chase rule confirms price has not already dropped past the forecast, and the down regime is intact. The sell entry marker fires right at that reclaim of the line to the downside. This time the stop rests just above the recent pullback high, again a structural point, and once more it is within the ATR limit. Price then continues lower. The stop trails behind the move after break-even is reached, and the trade runs down to its take-profit target, once again at a reward of 2 times risk. The take-profit marker shows where the short closes. Notice the rhythm across both trades. In each case, the strategy first confirmed a real trend through the SlopeGate, then waited for price to dip against that trend and reclaim the baseline with a committed candle, and only entered when the forecast still left room to run. That patient, repeatable structure is the whole idea behind trading the pullback rather than the breakout. That brings us to the end of our breakdown of Trend State Forecast Pullback. We saw how Holt's linear trend keeps a level and a modeled slope, how the SlopeGate defines the trend regime, how the reclaim and no-chase filters time each entry, and how the structural stop, break-even lock, and ATR trail work together to manage risk. Everything we covered today is educational information only. It is not financial advice, not a recommendation, and not a solicitation to trade. If you found this analysis helpful, please like the video, subscribe for more MetaTrader 5 strategy breakdowns, and leave a comment telling us which strategy you'd like us to study next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.